Hello, my business owner friends. Thanks for tuning in to the Grow by Joe show. In this video, we're going to talk about account receivable financing, what the difference is between account receivable lines and account receivable factoring, and some other cool innovative things that you probably haven't heard about that have happened with this type of financing that could be a really cool financing tool for your business that you actually may be missing out on. So stay tuned. So in this video, I'm going to talk about 3 things that every business owner should know if they're considering account receivable financing for their business, and some cool innovation that has happened recently that has really changed the game for this type of financing product. So you may have heard that all these different terms, account receivable financing, factoring, invoice financing, they're all very similar. Some of them mean the same thing, but there are some differences between actual factoring and an account receivable credit line. And that's what I'm going to talk about today. Most people don't realize it, but this type of financing has actually been around for 100+ years. It's a very old form of financing that until recently hasn't really had any innovation. So there are a few new lenders that have really done some very cool things when it comes to account receivable financing. They've eliminated the back and forth of having to send your invoices into the lender or to the underwriting department in order to get paid out on those. There's been a few new lenders that have done some great things when it comes to account receivable financing. If you are a business-to-business business owner, then it's definitely worth exploring some of these options for your business. Some of the things that they've done is, one, is streamline the process and made it much more efficient and eliminated a lot of the back and forth that took place that really made having this type of financing more of a drag than it was worth a benefit to the business. 2, they've also done some really cool utilized technology and have linked to either your bank statements or actually right into your QuickBooks or your accounting software, where as invoices come in and as your sales grow, your access to capital and credit line actually grows with it. And they've also created some really cool platforms or portals that you can literally log into. You have a connection to your QuickBooks or your whatever accounting software that you're using. As invoices come in, you can literally click a button and boom, money in your bank account same day. That's awesome, and in this type of financing product, there hasn't been anything like it until probably the last 24 months or so. All this innovation is great, but what does that mean to, for you, for your business? Well, that basically means for you as a business owner, it just makes it a heck of a lot easier and eliminates a lot of unnecessary stress or worry about cash flow, and knowing that capital is literally one click away. So if cash flow gets tight or you bring in a new customer, you can click a button, have money in your bank account, and be back to focusing on doing what you do best. So I'm going to go through 3 things that are really important to know. The first one is there is a difference between factoring and an account receivable line. So factoring basically means you're selling your invoice to the lender. When you get an invoice, you sell it to the lender for some upfront money, and they take over that invoice and they collect that directly from whatever the customer is. You really need to know if you're going to utilize factoring, and not saying it's a bad thing, but do you have to, some companies require you to do all or none. So basically meaning that you have to factor every single invoice that comes through the door, and every invoice that comes in, the finance company would basically purchase that invoice from you and own that invoice. Again, that can be a great product, but if you don't need necessarily to factor all of your invoices, it can be expensive, and there's other products that are out there today where you don't have to do that. So account receivable credit lines, these are great products and can really be used to grow and scale your business. What's cool about a true account receivable line is that basically it'll use your receivables as collateral, not actually purchase the invoice. And as those receivables grow and the amount due to you grows, your actual credit line grows. The cool thing about that is as you book your receivables, you need money, you literally can pull the money as needed and use it as a credit line. As the receivables come back in and get paid, it pays down your line. As you book more receivables, you have access to more credit and can pull it as needed. Really great product. And with some of the new innovation, it automatically connects to that accounting software, so you don't have to send these invoices in as you get them. You book them in your accounting software, money comes available in the line, click a button, money in your bank account. Super easy, super clean. Definitely something worth exploring if you're in the business-to-business type of industry. Number 2, super important that you ask this question, is it a notified or a non-notified financing product? Meaning, if it's notified, the lender, when they purchase that invoice, will notify your customers that, hey, me, ABC lender, now owns this invoice and you're going to pay me instead of the customer. A lot of business owners don't like that product because it lets their customers know that they're utilizing some form of financing and that they sold their invoice. Definitely can understand it. Really important that you ask that question. If it's non-notified, then basically your customers are not notified, and it's a lot cleaner and a lot simpler. Number 3 is advance rate. You need to know what the advance rate is. So the advance rate is very simple. Basically, it means if you have a $100,000 invoice and your advance rate is 80%, that means that you'll immediately have $80,000 available. Some companies will only go up to 80%. Some lenders will go up to 90 and 95%. 85 to 90% is pretty typical. Most lenders don't go past that. Some do, and depending on the situation, depending on the customers that you have, will make up that difference. Really good question, though, super important, so you can know how much money you'll have available. All right, so I know I said 3 tips here, but I'm going to throw in 2 bonuses. These are also really important. Super important question is, how much is the total amount that the lender can go up to? You know, how big can your line grow to? Some lenders will cap out at $1 million. Some at 500,000, others will go up to 10 or 15 million, but it's really important if you're planning on growing your business, which you should, that you know that you're with a lender that can grow with you. Sometimes you have to start with a lender that can only go up to a certain point, and that's okay too, but at least you know what amount, what's that limit, that financing cap that lender can go up with. So either, if you had to start with someone to grow with, at least you know as you're growing, hey, as I reach this certain point, my AR line's only going to go this high, and maybe need to start exploring another lender. Or if you have a plan to grow very quickly and you're going to utilize an account receivable line to do that, you want to know that that lender there can grow and keep up with that growth, so you don't get a year into it and then realize that you have to find a new lender. Super important question. So number 5, bonus question. What are all the fees? Super important question. There usually are some different fees that are tied to either a factoring or an AR line. When you're dealing with an AR line, usually there'll be a true APR, which is your rate. On top of that, there'll usually be an origination fee, and then there might be some minimum utilization fees, meaning if you don't use a minimum amount of money, there's a charge on the difference that you're not using. That's normal, but it's just important that you know those fees so you understand it and know what type of line that you'll actually need. When it comes to factoring, usually there's a charge per invoice. Some companies, some lenders will charge a rate per 5-day period. Some will do per 15-day period, some per 30-day period. So basically what that means is the longer the invoice is out there and has not been paid, you'll continue to get charged for that length of time or period. On top of that, there may be an origination fee per invoice and sometimes a processing fee. So it's just important to know what those fees are. So if it's account receivable factoring product, then usually you'll get charged a set percentage. It can be anywhere from 1% to 3% per month. And the longer that invoice is outstanding, has not been paid, you will get charged for that. So it's really good to know what those rates are per month. So as I mentioned earlier, with all this innovation in the space, it's really changed the game in account receivable financing. And if you're in that B2B world, these are really some options that you should be considering, and they're much different from just a year or 2 ago. So if you'd like to explore these options in more detail and get some more information, check out the link below. You can speak to one of my team members. They'd actually would love to help you answer any questions you have, talk about the different options that are available that can help your business. I don't know if you know this, but my company, National Business Capital and Services, we've created a platform with 75 lenders on it where you can apply all in one place and have access to all these different lenders and review the different options that are available today, and have someone who really knows what they're talking about walk you through each one of those options and explain what could be good or not good for your business. And we're here to help you grow and help you get to the next level. I hope you utilize financing in a real powerful way to level up your company and take it to the moon. Thanks for watching this video. I appreciate you tuning in. Please subscribe. I'll talk soon. Take care. All the best.